Piki Pramami Radharia, a load of movers and shakers in trade today on the back of earnings as well. Joining us to decode the same and what you should do with these counters, we have Sharmila Joshi joining in. Sharmila, good morning and welcome to the show.
Good morning.
Sharmila, let's start off with the Bajaj Auto. An interesting quarter for the company. It has been a tough time. However, they weathered the storm really well, it seems. Margins are at a 9-quarter high as well, and the pipeline seems to be pretty strong. What would you recommend an investor to do? Recommend an investor to do? I beg your pardon, taking into consideration the valuations as well currently.
Yes, so I think, as you said, we did see the numbers from Bajaj Auto, and as you rightly pointed out, the growth seems to be a little tempered, but they have delivered on the other front. And in terms of stock price, also, this has that way been a bit of a performer. It is close to its 52-week high in a sort of a environment where TVS Motors and Hero Motor have seen a bit of cuts. That said, I think that the surprise and the positivity for me will come from two, three reasons. One is they do have an EV launch, and especially in the three-wheeler space, I think that will be very well received. And also, I think we are seeing a general pickup in their exports. And exports has been a very big market for Bajaj Auto. And in fact, that was the USP that they advertise the kind of huge exports that they were seeing. And those markets seem to be recovering. So I would be positive, but sort of cautiously. So it's a sort of a long-term hold for me. But perhaps for a fresh buy, you could see some selling on the back of the fact that numbers are sort of are good, but not very good.
Right. Moving on, you have all the Gujarat PSUs which are buzzing in trade, and this is on the back of the new policy for dividend distribution bonus shares as well. Now, clearly, what they've come and indicated is a minimum of 30% of the profit after tax or 5% of the net worth, whichever is higher, to be a minimum level of dividend that needs to be declared for shareholders. That's an interesting move coming in there. And you have GNFC, GSFC, GSPC, a lot of these counters which are up and about in trade. What would you advise an investor to do? Because clearly, if you take the numbers, if you take the 12-month trailing profit and the 30% of the PAT, the dividend yield is in that range of 3.6 to almost a 7.9% for the 5 to 7 listed companies. A good investment bet?
Yes, especially if you look at it from the statement that you read, that it is either 30% of your net profit or 5% of your net worth, whichever is higher, and that's like the baseline. So in a good year, I'm assuming that they would be expected to do more. And given the fact that in this kind of an environment, people are looking for safety, people are looking for stocks where dividend yield is good. This can be a good strategy, because at the end of the day, there are a whole lot of retail investors who are looking for opportunity to invest in decent stocks where dividend yield is high, and I think some of these would make the cut. And we're already seeing it getting reflected in the kind of buying that you're seeing in the GNFC, GSPL, etc. So yes, I think for retail clients, this would be a good strategy.
Right. Moving on to Rallis India, there has been a disappointment as well because the results are declining. The company has posted a loss in this quarter. What would you advise an investor who's holding a Rallis India to do? Or from a valuation perspective, do you think this could be just bottoming out from here on?
Well, it's difficult to say, because I think honestly, we have to look at what we are like maybe a month away from monsoons. And this would be a wrong time to make those kind of speculations, because we really need to see how the monsoons pan out. The other thing that goes against monsoons being normal this year is the fact that we've had a normal monsoon for the past 4 or 5 years, and the law of averages seems to suggest that this year could be slightly slower year. So from that perspective, I don't see Rallis recovering in a hurry. But I think if you're a long-term investor, you can stay invested, because fertilizers as a space is very decent.
Right. Moving on, Mahindra CI is an interesting one. Clearly, a strong set of numbers that have been reported. The stock is also doing pretty well. If you see the one-year performance, it's a 65 to 66% up move. And in the last 1 year, it's at a high of 462, but then cooled off from there on as well. So we're still 100 points away from its 52-week high. If you have to take the valuations into consideration, the performance as well, and the way the stock price has moved, does it warrant a buy at current levels?
I think so, because I have two views on this. One is, for two reasons. One reason is that overall I'm expecting auto ancillaries as a space to do better this year. Because, we had an environment where we were facing this entire semiconductor issue, and we are now getting out of that. So you're expecting the delivery of vehicles to sort of pick up in this coming year. And I think that will work out, sort of relate or translate for better numbers for auto ancillaries. And secondly, I think, the kind of basket that Mahindra CIE has, where their exposure to EV will get them better sort of traction going ahead. This would be a reason that I think that Mahindra CIE looks attractive. So yes, I think that this is a stock that can be bought at current levels.
Right. Moving on to the real estate space, Sharmila, you have Anant Raj, which has posted a profit of around almost 50 odd crores in the quarter. What do you make out of it? Because clearly not a major uptick coming in terms of profitability, but the prospects are looking pretty strong for the real estate segment.
So there, I think you have to pick and choose. Overall, real estate, if you ask me, as a sector, I'm a little neutral. But yes, I think individual players are showing outperformance, and I think Anant Raj could be one of them. Valuations again look decent. So yes, I think that given the fact that they've declared such a great quarter, and overall their projects seem to be poised well, I think yes, this looks interesting at this price.
Right. Moving on, IPCA Laboratories as well as the Unichem are in focus. In fact, Sharmila, clearly the stock actually hit a 52-week low in yesterday's session. And it seems the Unichem acquisition is spoiling the mood for a second consecutive day because the stock is under pressure today as well. What do you make of this acquisition, number one? And do you think it's a deal, a misstep for the company, or you see good prospects from here on?
So, I always think that market wisdom is complete in itself, So, you have to really ride the sort of rough out. And obviously, market is sensing that while, coming to the specific deal, there are obvious positives. Because otherwise, I think IPCA wouldn't have paid the kind of price that they paid. And, then in turn, it's going to trigger an open offer. And, what they're going to end up spending for that. So they obviously see those underutilized API facilities, which they could sort of, but the very fact that there are so many ifs and buts involved is something that the market is sort of leading into and not liking, and which is why we are seeing a correction in the stock. Personally, I like IPCA a lot as a stock, and I think that it's at a great price point at this point in time. But I completely take on board, why market is sort of not liking this news too much, and I hope the stock price sort of settles here and you see some buying emerge.
Right. Moving on from the banking pack, AU Small Finance Bank is an interesting one because clearly, if you see in terms of the profitability, it's the highest ever profit number that the bank has reported. The stock has been trading under pressure. Now, is it that the market is indicating that the risk and reward in terms of AU is unattractive right now? And as compared to peers, is the valuation expensive?
Well, I think the stock has had a bit of a run up, and maybe it is sort of just taking a breather because, as you said, I think the results were fairly okay. The news flow has been fairly decent, but I think it's just taking a breather. So, and also I think probably waiting to see if there is follow up on the kind of numbers that they declared this quarter, and it's like it's a consistent sort of a return that they will have going forward. So I think it's not, I'm not viewing the stock negatively, but as a valuation, as you pointed out, probably it's taking a breather because it's done a catch up in valuation, and now markets is sort of waiting to see whether they deliver going forward.
Right. Very lastly, if you see the consumption pack, Sharmila, you have a Nestle as well as a Tata Consumer, which has reported numbers. Good set of numbers as well, if you see, because clearly, if you talk about Nestle as well, it's actually surprised the street really well. The key concern that I look at from a Nestle's perspective is in terms of valuations as to what should be done. Simultaneously, if you see in terms of even, a Tata Consumer, what is at bay from here on, according to you? Do you think there could be a good recovery from here on for both these counters?
I like both the counters. So, just let's get that out. But for me, Nestle is more of a long-term hold. Because as you said, you rightly pointed out, the valuations don't make it an attractive buy at this level. Also, I think margins were a bit of a concern this quarter, and market is reading into that because their sort of key products, milk, and they are indicating that those prices will continue to stay at elevated levels. So how that could impact margins going ahead. But if you recall the stock, post that whole Maggie fiasco that we had, the stock price had gone to 7,500. From there, we've seen it recover, and now you've really seen it, increase its capacity and do the kind of sales that they have this quarter. So they've come a long way. So perhaps the stock could take a bit of a breather and sort of stabilize at these levels. But if you're a long-term investor, I think obviously you stay invested in the stock. I don't know about buying fresh. Because if you bought at this valuation, it simply means that your holding period could be reasonably long. Which for a long-term investor, I think you should be comfortable with that. Coming to Tata Consumers, I'm actually more enthused about this story because I think the kind of products that they are in and their grocery line, and if you see even in the numbers, their India business, the way it has delivered, this is a very scalable business, and we've seen some big ticket entries into this business. We've had Reliance, Adani, both enter into this business. That gives you sort of a sense, the kind of size that this business could scale up to, and the possibilities that there are. And I think they've sort of established themselves very nicely in that space. Also, yes, I think this is a stock that I like, and I don't know about again whether it will perform today or tomorrow. But again, for me, this is a long-term buy.
Absolutely. And with the new entrants coming in, the biggies coming in, it actually expands and gives you a picture of the total addressable market size as well for these categories. So clearly well pointed out, Sharmila. Thank you so much for joining us on the show and giving us those views on those counters which are buzzing in trade today. Thank you. Stay safe and speak to you soon again.